Hello. Oil prices surged early today as tension escalated in the Middle East after a blast at a Gaza hospital. To make matters worse, the summit between U.S. President Joe Biden and Arab leaders was cancelled, reducing the likelihood of a diplomatic solution to the Israel-Hamas conflict. Further supporting the rise in oil prices was the U.S. crude stock data released yesterday, showing a 4.4 million barrel fall in inventories during the last week. Treasury yields jumped yesterday following the release of the U.S. retail sales data for September that came in at 0.7%, more than double the 0.3% rise that analysts had been expecting. Furthermore, data for August was revised higher to show sales advancing 0.8% instead of 0.6% as previously reported. This surprise increase caused the benchmark 10-year Treasury yield to rise above 4.8%. Based on historical patterns, equities tend to fall when Treasury yields rise, but oddly the main U.S. indices seem to be holding on, with the Dow Jones Index even ending yesterday's session with a slight increase. The tech-heavy Nasdaq, which should be weighed down the most, only fell 0.25%, even with the drop in chip stocks following the new export restrictions. This could point to two near-future outcomes: either the indices will prevail with support from positive earnings releases, or eventually be caught in a various downward spiral. Foxconn, the world's largest contract electronics maker and major supplier for Apple, has announced a collaboration with NVIDIA to build a new kind of data center dubbed AI factories. One of the applications of the AI factories would be receiving and processing data from autonomous electric vehicles, which would then be used to update the entire AI fleet, according to NVIDIA's CEO. This move is the next ambitious step for AI companies to design AI that can improve itself and produce further intelligence. United Airlines shares dipped after hours trading yesterday despite third-quarter earnings expectations beat, as their downbeat guidance for the fourth quarter disappointed investors. The company expects higher fuel costs and the suspension of Tel Aviv flights to weigh on their current quarter financials, leading to the $1.50 to $1.80 EPS forecast versus analyst estimates of $2.13. The Procter & Gamble company reported financial results for first quarter fiscal year 2024, beating the expectations. The company reported EPS of $1.83, 11 cents better than the analyst estimate of $1.72. Revenue for the quarter came in at $21.9 billion versus the consensus estimate of $21.57 billion. The steady demand for its products helped to sales revenue despite several price hikes. P&G's fiscal year 2024 EPS of $6.25 to $6.42 versus the analyst consensus of $6.07. As Phillip Capital team, we wish you happy and healthy days.